Hello and welcome back to Mortgage Talk. I am here with Roger today. It's just you and I. Hello, Roger.
Hello, how are you?
I'm very well. How are you?
Yeah, very good, thank you.
It's very sunny. It's all good.
Let's go outside.
but it's going to snow next week.
I know, on Mrs. P's birthday, that's it.
No, shocker. That's yeah.
Hot tub in the snow.
Right, so today's subject has come from quite a few people have been asking these questions. I know it's a worry and a concern. A lot of people seem to think there'll be difficulties getting a mortgage if, for instance, they are self-employed or classed as a contractor. So can you just run through, if we could just kind of go through the individual scenarios and give advice based on a situation, first of all, of somebody who's self-employed? How would they go about sorting out going to a mortgage lender?
Okay, so there's a mass misunderstanding about the amount of accounts people are after, and that's where they get hung up. It's actually just 1 year's accounts, okay, or a combination of 1 year's accounts and sort of self-assessment forms, etc. What I would say is reach out, because every situation is different. If you've just started going self-employed, say last month, 2 months ago, or 6 months ago, then unfortunately you will need to wait 12 months until your first accounts are filed.
Okay, that's great, Roger. And what about contractors? Is that quite difficult for a contractor to get a mortgage?
Okay, so contractors with some lenders are actually classified as employed. So therefore the lender will actually underwrite the mortgage and affordability based on their daily rate. So you don't need the relevant SA 302s or accounts.
Okay, and then what about somebody who's newly employed?
Okay, again, there's a massive misunderstanding. You don't need to be in your job for any qualifying period, provided it's like for like or your first position. Okay, then people will actually underwrite the mortgage affordability off the strength of the contract. In some cases, you may need to have started, in some cases not. Safe professions such as teachers, then you can actually apply for a mortgage before you've actually started your work.
Okay, and is that the same thing to take into consideration if you're in a probation period on a job you've just started?
Again, the probation period is not an issue. People tend to ignore that if it's like for like employment or it's something you're specialism in. Where it does get a bit sticky is when people start talking about on target earnings and bonuses which are not actually earned. We can't take those into consideration because in this case it's a bit of a dilemma here. This is actually fact. Lenders based on fact and not on fiction, and bonuses are very fictitious in the mortgage world.
Okay, brilliant. So separate from those questions, I've had another question that came in, and it's also a question that I would like to be answered as well. So I rent, and I'm always told by my family in particular that it's always best to invest your money into property. And actually, interestingly enough, someone had a discussion with me the other day, and obviously I'm not a mortgage advisor, and they said to me, Maria, surely it doesn't make much difference these days. If we're in a marketplace where the interest rates fluctuate in property prices, is it really worth renting or buying? I just wondered what your opinion was on that, Roger.
Well, I've always been a fan of actually buying. I appreciate that people do. It's difficult, and obviously upfront costs, etc. But you've got the new 95% scheme coming out in the second-hand market, and you've got to have to buy a new market. What I would say is that when you actually rent something, you don't actually benefit from capital appreciation, and capital appreciation is the biggest single contributor to wealth. If you look at anybody who's actually got wealth in the UK and abroad, often it's via property.
Okay, brilliant. And it's just a brief one today, Roger. But what I'd really love to know is what you love most about your job. What gives you passion about your work?
So I like trying to make the impossible possible, and that drives me. Where somebody else has said no, we can say yes. It's all those situations. I've had a fundamental principle that everybody deserves housing. And that's not to say that we turn a blind eye or we cut corners, because that's not the case at all. What I would say is that, with years of experience behind us, we outperform computer systems time and time again. And if you're a newbie in the industry, great, fantastic, but you don't have the experience. And so you can't always talk with massive authority, which an old person like me does.
There is another question, actually.
Oh, gosh, another one.
To ask another one. It's actually about savings accounts. So what would you say is the best savings account when it comes to saving money towards a mortgage?
Okay, so it's a really good question. So people expect savings accounts to actually really perform well. They won't. If you've got low interest rates, you've got low savings rates. If you've got high interest rates, you've got high savings rates. So you're never going to turn around and make a mass return on saving money in a savings account for your mortgage, unless you look at the Help to Buy ISA, which has various bonuses attached to it to enable you to buy property.
Is there anything else that you'd like to add, Roger, in terms of like frequently asked questions that you get? Because I know we cover quite a lot of things on a weekly basis.
Okay, what I would say to you is that if you actually borrow money from your family or your parents, well, sorry, let me start again. If you actually get gifted money from your parents or your family, then you can use that towards your deposits, and the money doesn't have to actually ever come from your own source. I've got to say is that, you know, the biggest corridor to wealth is via property, and that's time and time again. So I would really focus on, you know, not having that beer and saving that pound. I know it sounds tough, but you actually reap the rewards later in life. Now, today's sacrifice or tomorrow's joy.
Yeah, you know, little steps make huge changes over time, don't they? And that's true. You know, people always think that they can't afford to do something, they can't afford to get a mortgage, when in fact, you know, it is actually a lot more financially viable than people realise.
It is, and you've got to actually turn around and you know, want to do it as well, and your past history needs to demonstrate that. So there's no point turning around and saying, you know, I haven't got this, or I haven't done that, or I didn't pay that, and I've forgotten about this, because that's just a bad risk. You know, there's a massive fallacy in the world that first time buyers are a good market. It's a good market share to have, but from a lender's perspective, it's extremely risky, because often
Yeah.
it's with somebody who has a small deposit and no experience in running a property or managing debt. So therefore, that's, you know, it's a marketplace which is, dare I say it, commercially sensitive. And it's a great marketplace to be in, but actually lenders always want those with a bigger deposit and a payment history, because it's safer lending.
So, Roger, could you actually just break down the mortgage process? Because I know a lot of people don't understand the different processes that are involved. Is there any way of kind of summing that up really quickly and clearly?
With all these things, it's really a question that somebody that you reach out, you ask questions. I would stay away from online portals and recommendations from a friend, a brother or sister, etc. They're really good sounding blocks, don't get me wrong, but the best person to talk to is a mortgage advisor. Again, I would say, you know, somebody who is been in the industry for some time. What one lender doesn't do, one lender will do. Okay, so it is very much a situation of talking, then trying to get an agreement in principle certificate, and with that, the mortgage advisor will talk you through the pitfalls and benefits of doing that, and that puts you in the best possible position.
So I'm making it about my questions today, Roger. So I don't. It's all about me. I don't have a pension. So in terms of, you know, where I save or where I should invest, from your perspective, I guess you would think that the best thing to do would be for me to actually put money into a property.
Put another way, when you come to retire, you can be in a situation that you've got no asset behind you and you've got to carry on renting, or you've got an asset behind you and you carry on living. It's your shout. I think that sums it up nicely.
Roger, thank you so much for your time today. And next week's topic, I believe we're talking about refinancing your home and where best to invest the money to add value to your property.
Absolutely. So we'll see you this time next week. Bye-bye, folks.
Bye-bye.
Bye-bye.